Welcome everyone to Vested Interest. This is Shane back again for another stock pick of the day. It is Tuesday, January 24th. Today we are going to be taking a look at 3M out of the industrial sector. Let's jump right into the video. So if you want to know more about them, check them out, www.3m.com. That is their homepage where I pulled this information from. From humble beginnings to Fortune 500, when 3M began in 1902. That's right, 1902, another one that has been around the block, right? Been around for over 100 years, so they have seen it all. They have weathered the storm, so to speak, been around since the Great Depression, long before that. All the downturns along the way, wars, famine, pestilence, you name it, the housing crisis, the dot-com bubble crash, the oil wars in the 70s, right? The 80s crash, the 90s crash, you name it. They've come out the other side and made it through. Another thing, we won't read all of this, but if you want to stop it, go ahead and read through this. I will say that the discovering the poor quality, let's read this top part. Our 5 founders had a simple goal to mine for corundum, a mineral ideal for making sandpaper and grinding wheels. Turns out what they thought was corundum was really another low-grade mineral called a northosite. I probably butchered those, and my uncle is a miner, so he would know those. Actually, fun fact, he found the only jade mine in all of North America, and one of the largest gold nuggets. I believe it was in either Arizona or New Mexico. His name's Wayne Holland. If you look him up, you might find him under Wayne Holland Ghost Jade. That's my mom's brother. So he's a miner, so I do have a soft spot in my heart for a company like this that started out as a mining company. Now they are much more than that. Now they have their hand in a bunch of different industries. Some of the brands underneath 3M, Ace, right? And you can go to their site and click on these, and you'd be able to see all the brands underneath Ace. That's Ace Bandages, so that would be like under your medical, Command, Filtrete, Futrino, 3M, Littman, right? A lot of stuff in the construction industry, NextCare, Post-it. So even in the office space, Scotch Brite. So even your cleaning for your kitchen, Scotch Guard, Scotch Painter's Tape. So again, in the construction industry, so they really have their hand in a lot of industries here. Another thing I'd like to focus on, with corporate operations in 70 countries and sales in 200, we are committed to creating the technology and products that advance every company, enhance every home, and improve every life. So they have a footprint in over 70 countries, and then they make sales in 200 total. So worldwide company, again, that's been around for over 100 years. Now they do have some litigation issues currently, which is part of the reason that they have pulled back significantly. Well, let's jump over. We are still talking about 3M Company, ticker MMM. They did close the day down 6.21%, which is the main reason we are looking at them today. They closed out at $115 even. Looks like they are up a little bit in the after hours, at least whenever I pulled this information around 4:49 p.m. They have a 52-week range as low as $102.58, as high as $175.25. I would like them better at this $102.58 or close to it. Average volume of 2.855 million. Today's 10.2. So it looks like a lot of selling today, even though it looks really relatively flat overall. Let's see what their previous close. So they're down a little bit, right? They closed yesterday at 122 and they opened at 116. So they dropped from 116. But really dropped from 122 that they were at yesterday. So that's that 6.21% drop that you're seeing. Market cap of $63.565 billion, a beta of 0.99, so they are pretty much in line with the market. Beta is the volatility of the market. That's what it really means. A 1 is the market. Anything below 1 is less volatile. Anything above 1 is more volatile, for those of you who may not have known. PE, price to earnings, is 10.03, so it is low, right? And again, if it went back to this 102, it would be a little lower than that. I would like them a little under 10, just because they do have some litigation issues around some earplugs with the military that they are currently dealing with, and that could cost them a significant amount of money. Earnings per share is nice, $11.46 per share. That is very nice, actually. Earnings date is January 24th, so that was today. That may be part of the reason I did not look at their earnings report, but you might want to look at that and see if they missed on earnings. That may be why the pullback here. Forward dividend is $5.96, paid out quarterly, so this is on the year, divide by 4 for the quarterly payout. We'll see it here in a minute. And they have a very nice dividend yield at 4.86. And if you went by dividend yield theory, they would be undervalued according to that. Their typical 5-year dividend yield is much lower than this. So basically what that means, dividend yield theory, if the dividend yield over a 5-year period or even from the previous year is higher than the 5-year average, it's undervalued. If it's lower than the 5-year average, it is overvalued. That's just a quick way to get a reference. Obviously, you don't want to just go off of that. You want to look at the fundamentals of the company, jump into the statistics. That's one place to look at: price to book, price to earnings, price to sales. What's their margins look like? Are they buying back shares, or are they diluting you as a shareholder? You want to look at all those, look at their financials. Where are they at with free cash flow? Where are they at with revenue? Is their revenue growing? Right? So you'd want to go through all of this, but that is a quick reference to look at. Okay, and you can find that in statistics. Go to the bottom of the page. You'll see their 5-year dividend average, and then you can see their current dividend average. Compare the two, and like I said, if it's lower than the 5-year average, it's overvalued, and if it's higher than the 5-year average, it's undervalued. Just a quick way to gauge whether or not a company may or may not be overvalued. Dividend yield theory is what they call that. Now, ex-dividend date is November. The last one was November 17th, so they should have a dividend coming up if it hasn't already been paid out. And their 1-year target estimate, at least according to Yahoo Finance, where I pulled this information, I am not affiliated, they have a 1-year target of $129.01. Now, I always do recommend more than one source. So another source I like is stockanalysis.com. Again, you pick your own sources. Some people like Seeking Alpha. There are plenty of other sources out there. These are just 2 that I like. Just make sure you're looking at more than one source so you can verify that the information you are receiving is accurate. And they have 29 stock analysts that have taken a look at this. They call it a consensus hold, and actually it is close to, what they are calling a sell here. And they have a low estimate of $111.10, which would be a 3.39% decline from where it currently sits. They have an average of $132.07, which would be a 14.84% increase in stock price. And if it happened to hit their high, $220.50, that would be a 91.74% increase in its stock price. Now, this is where I would typically show you my position. I do not currently have a position in 3M. It is one that I would buy back into at the right price. I would really like it under $100, right? The 52-week low is around 102. I'd like to drop down a little bit more just because the potential litigation that they are facing in the lawsuit and payouts associated with that could be significant. No telling where that might end or how many people might jump into that. So until that sorts out, they may just be, as well as heading into recession, a lot of their products around the construction industry specifically would be impacted if we had a prolonged recession. So this one is one I am watching for a better entry point, but it does have a nice payout ratio, 51.60%. Dividend growth is not really there, right? Very slow dividend growth, 0.68%. Again, they pay out quarterly, $1.49 per share quarterly. And that is really my take on 3M. Like I said, I am holding and waiting. I'm not really holding because I don't have any in my portfolio currently, but I am waiting for a better entry point. I would like them under $100 just because of the litigation associated, like I said. If you want to know more about them, go ahead and check them out at their homepage. Go back to the other slide, check that out. But that is really it. As always, appreciate you stopping by. If you haven't done so already, don't forget to show me some love. Hit the thumbs up, ring the notification bell. Most importantly, subscribe to the channel. Go ahead and take a minute to do that. Hit that subscribe button, hit the notification bell. Join me on this journey to financial freedom. For those of you who already subscribed, I really do appreciate it. The channel continues to grow because of people like you. I do appreciate you all out there. This is Shane signing off, wishing peace and prosperity to you and yours. And remember, financial security comes to those who take a vested interest. Hey, we'll see you in the next one. Thanks for stopping by. I hope you're having a great week. I'm not a financial advisor. Nothing in this presentation should be considered financial advice. I'm only sharing my opinion and investing journey for educational and entertainment purposes. Investing involves risk. Can't do money. You should never invest any amount you're not comfortable losing. Always do your own research. Invest based on your situation, circumstances, and selected criteria, or seek the advice and counsel of a certified financial advisor.